as soon as I had time to put somebody in place and get back some of my time, that was an integral piece to success is systems and processes.
In 1 hour, you could be touching marketing, accounting, finance, sales, insurance.
Sleepless nights.
Lots of sleepless nights. Why? Today, we're going to talk about a topic I am very, very, very familiar with.
Is it building businesses and buying businesses?
It's buying versus building.
Okay, got it.
So, today we're going to talk about buying a business versus building a business and which one is better. Do you know which one's better?
I mean, if you got money, buying them is way, way better.
So, from my experience, where I have generated a lot of wealth for myself is because I usually didn't start off with very much money, is I've always built businesses on a shoestring budget. And that is by leveraging cash, sometimes no cash, assets I already have, and just putting a lot of hard work and dedication and filling in gaps with my own time, right? And making do with what I owned, which is very little at the time. But if I looked at it, and I can go down this whole, and if you guys watch our podcast, you know we've done both. We bought and we built. And on-call is one that you built at the very beginning, and then you put systems in place, and then you started buying. But Eric and I always joke around, if we had to start all over again, what would you do?
I'd buy that thing so fast over, build another one. Now, let me be clear. I could easily build another one. That is how confident I am, right? But I also have went through that grind, and it is nothing short of that. It is a grind. So if you have the money to do it or the means to do it, maybe it's not your money, or maybe you have an investor, or there's a ton of ways, syndication. There's lots of ways to do it, but building it from scratch is difficult at best. But it also creates a different level of understanding on what it takes to run a business successfully. Because there is a big difference between somebody who's never done business that just either A, steps into one because, hey, their dad gave over this business, right? Or they had a pot full of money and decided, I'm just going to get into business. I'm going to buy one. They never had any business acumen at all. That's why you always hear those horror stories.
Well, let's talk about some pros and cons, like what you've experienced. I'm going to say some things and you add into your experience.
Okay.
Right? Let's talk about building a company. Pros. When you build a company, what is a pro in my eyes? You're going to have full control immediately. You develop your own culture. Right? You developed your own on-call culture.
Yeah. And
you had full control from day one. The other one is you had lower upfront cost. You didn't have to make this acquisition at a multiple of EBITDA, pull it out of bankruptcy, etc. Right? What are some cons in your experience? If you build a business, what are some cons that you've experienced?
Sleepless nights.
Lots of sleepless nights. Why?
Because all you're doing is thinking about your business.
How to grow your business. And it's a slower pattern to success a lot of the times if you build it from scratch.
I'll go for another con. I got lots of them.
Huh?
I got lots of cons. Let's keep
Another con is you have a higher failure rate because of cash flow. You're trying to build this business. People don't know who your brand is. You're usually operating on a shoestring budget. So you're having to build a brand, operate a business, no cash flow coming in, and make a living. Right? What else is there? It's an endless grind. It's never ending when you buy a business. There's no systems. So you have to when you build a business, you have to put systems over on everything, right? How to get in a truck and start it. How to turn it off. How to clean it. Your accounting systems.
And let's just I'll be radically honest, is that a lot of times in the beginning, you don't have those and you don't have time for those. For me, it was push, get the job done, push, get the job done, do it right, make sure people are doing it right. And you don't have time to set up those systems, so to speak, right? Now, the second that you had the ability to put somebody in place to take away some of that pressure, right? So you put an ops guy in place, right? Well, he's running the day-to-day. I would say at that time, if you can do it before and make time to do it before, then go for it. But I wasn't able to do that, I would say, very successfully. But as soon as I had time to put somebody in place and get back some of my time, that was an integral piece to success is systems and processes, right? So at the very first availability, doing that is ideal. So
you got to be scrappy. I mean, when you're building a business, you got to be scrappy. You got to be quick-witted. You got to be thinking on your feet 24/7. You're going to be touching in 1 hour. You could be touching marketing, accounting, finance, sales, insurance, taxes in 1 hour.
Yeah.
And then have to jump in the service seat, and you might be touching all those while you're in the service truck servicing, in your case, restrooms.
Yeah, I did that.
Right,
yeah.
And then you go home. And then your first technician calls in, and then you're back in the truck. Mm-hmm. And then you go hire the ops guy, and he doesn't have enough qualified. You can't teach him right because you're in the truck too, right? So you don't have, your time is being pulled in so many different directions. And when you're building a business on a shoestring budget, or building a business with a decent sized budget, you're still going to be with very little of experience, which you had, right? You had some
very
experience,
little.
but not experience like this.
Very little. Yeah.
You have a lot of questions that you're having to overcome in that. You know, I was sitting right there, and I'm not perfect in any way, but I can say, hey, don't do that. Hey, don't do that. Hey, go this way.
I mean, the pictures I was looking at earlier, you were on the beach.
Yeah, but a lot of mine's verbal coaching. But
but
versus, let's talk about some pros of buying a business. What's one that if you bought a business, what would you get immediately? That's the most important thing in any business. If you're watching this, it's the most important thing in any business. What's the most important thing in any business?
I mean, cash.
Cash flow, right? When you go buy a business and you go buy it right and you do your due diligence and you set it up.
I think you should back up and say, you can't just go in there and buy a business, right? You have to also be intelligent enough or have intelligent enough people around you that know, hey, if you buy this is how much you're going to be cash flowing, right? Here's how much EBITDA you're going to gain.
Here's how much money I'm going to put back in it to upgrade your assets.
Yeah, that's right. I mean, you're making it sound a little easier than what it is, right?
Exactly.
So just for reference, right? It's not that easy. You don't just go buy it. But to your point, right? Those are all the things you have to do. You have to look at all the things. You have to buy that business, right? And what you're doing is you're buying cash flow.
You're buying, and with cash flow, what does that come with? Existing customers.
Yep.
Brand awareness.
Yep.
Right? Good or bad.
Yep. Potential of going verticals. If you have some different businesses that you could use those customers to go vertically integrate some other things. Right?
There's also some cons. When you go buy a business, you're changing the ways. The integration of you into a business, especially if it's like an owner-operator, and next thing you know, a young gun like Erik comes in there, starts changing the systems, and your key people start leaving you.
People don't like change, right? You hear it all the time. People don't like change. Another big risk is, if the business that you bought was heavily leveraged on a couple customers, if one of those leave, right, which can happen. People don't guarantee. You're guaranteed nothing to some degree, right?
100%.
You can't you can buy customers, right, but they're not guaranteed that when you sign that paper, they don't leave the next day, and that's a risk that you have to take.
Well, another one too is every single acquisition I've ever made. We're talking about buying a business. It's the same thing as acquisition. Is not every business owner, not one yet, has told me every hidden problem.
Oh, yeah, yeah.
Everything is always butterflies and rainbows when you're buying that business, and it has so much upside.
Oh, yeah.
And I'm like, every time, I'm just blunt now. I'm like, well, why don't you do it?
Yeah.
Why aren't you doing it? If it has this much upside, why aren't you doing it? And it's usually they come back, hey, I'm just tired. I'm ready to retire. I'm making good money. I need a pop. I'm wanting a change. There's always a reason when you put that question back on their deal. But there's always going to be hidden problems in this thing.
Oh, yeah. I mean, you can't blame them, right? They want to get the top dollar out of their business, so you know what you're up against. Anybody who's selling something, they want to get the most money out of they can get. So they're going to tell you to some degree they may be skating some truths, if you will. You got to be smart enough to understand the majority of the problems that are going to happen by.
So let's talk about one last thing I'm going to throw on you. So we're talking about, in this podcast, we're talking about buying a business and starting a business. Mm-hmm. Which one should you do? Let's talk about a real life scenario with where Erik has significant experience and myself included. We did a hybrid approach, right? What does that mean? We started off organically. Erik started off building a business on a shoestring budget with zero systems with one customer. Mm-hmm. He built a brand. He put systems. It forced him to learn the business. It forced him to learn it on the ground level all the way up to where he is now. He's the president of the company, right? Mm. Doing so taught him a lot of lessons along the way, some of which he'll never forget and some of which he wishes he could have forget, right? Mm-hmm. It taught you life lessons. It gave you a lot of experience in the industry from the ground floor. Taught you how to manage people, taught you how to multitask, taught you how to deal with your emotions, right? All those things you have to learn when you're building a business from ground up, right? You overcome the if factor. If I'm not smart enough, if I don't have enough money, if this is not the right time, right? The fear factor goes along with the if factor, right? Fear, I might not be smart enough. That guy's better. That guy has more money. And you don't get that in your head. You just overcome those problems. By building a business, you learn how to be a business owner. And if you're a successful business and you built it yourself, you're going to be you're an industry expert at that point, right? The hybrid approach is you build a business, you create systems, you become an industry expert, and you know what to look for, what Erik said earlier. You just don't go in there and buy a business. So then Erik went out and made some acquisitions. How was he able to make acquisitions? Well, he did it two ways, in my opinion. He went out and put a lot of pressure on his competitors in a local marketplace. Mm-hmm. So they knew he was for real. They knew what he was talking about. Right? Mm-hmm. And he also developed enough experience in that one particular industry, this industry we're talking about is portable restrooms, that he was able to put an accurate number on there and buy the company that's fair for both sides and get the deal done across the finish line. Mm-hmm. And that's what I'm saying is a hybrid approach, right? You start a business and then you make acquisitions.
I would say there's one other piece that you got to make sure we talk about, and that's the reason I was able to do that is important as well too. We didn't suck the business dry in the building stage, right? We did not. I took a haircut, we'll call it, okay, from where I was at to when I started this business, right? A financial haircut, and we had a pact together, and we're like, hey, man. We know we need to put our money back into this business as fast as possible, right? That way we had cash should we need it, right? And we show good numbers. We're taking low salaries. Our EBITDA is increasing. When we go to the bank and we're like, hey, we want to buy this, not a lot of questions, right? Because we self-sacrificed. So
self-sacrifice is the only way I've been able to create wealth for myself.
So it's very imperative that you understand it wasn't just we didn't build a business and we were barely skating by and we were living high on the hog, right? We self-sacrificed for 3 or 4 years, continued to put our money back into the business to buy assets in cash, right? Creating a lot of wealth and value. And then once we were set up and the groundwork started getting laid by me and some other people for buying these businesses, when it came to fruition, we had the leverage, we had the capital, we had the financials to be able to prove, hey, we can not only afford to buy this, and the bank agree, but we can integrate this, which is another whole piece, right? Not just being able to buy it, being able to integrate those customers into your business is another big piece where you could really things could fall through the cracks pretty easy, I would say. Because you can't afford, you bought all these customers at a certain dollar figure. You can't afford to lose very many of them. And you run your numbers and there's going to be some deltas in there, right? But you have to have a very strict plan. You have to stick with it. And I'm not saying that number one time we did this, I was fucking perfect, because I was not perfect. But we learn from these things when we do them, and we do them better the next time. And then the next time we do it, we'll do it better again. But understanding that buying it is one piece, integrating it is another one, and there is a lot to both, right? And we were able to do the buying piece because we self-sacrificed for a period of time.
And you developed a lot of industry experience.
Yeah.
So when you went there and make those acquisitions, they weren't guesses. It's not like you're like, hey, I think I want to be in the restaurant business. Well, have you ever even served a customer? No. Have you ever done this? No. Have you ever cooked anything in the kitchen? You ever washed dishes? You don't know anything about it.
Yeah.
And this goes back to 3 decisions and frameworks, I would say, that we need to ask ourselves. Ask you watching, listener. Do you have more time or money? Because if you have more money than your time, if your time is already limited, but you have a pot full of money, you might want to ask yourself, do you need to be an owner or an investor? Which goes into question number 2 that I would ask myself if I were you. And that is, do you need to be an operator or an investor? And there's a big difference. An operator is working the business, they're in it, they're living it, they're breathing it. An investor says, it goes back to question number 1, I have a pot full of money, my time is limited, I'll invest in Erik. Right? Mm-hmm. But if you're an investor and you choose that route, let's kind of dive into that. If you're an investor, you better know your industry so you know that you're not getting ripped off, you're not overpaying for things, so you're preserving the most precious thing in the world, and that's your capital. Mm-hmm. Right? And then if you're an operator, and if you choose that route, you better be willing to self-sacrifice and do the things that Erik just spoke about. And that is self-sacrifice, a lot of stress, a lot of time, a lot of frustration, a lot of everything, a lot of you give up all your hobbies. Your life is your business if you're going to make it.
I call it character building.
Yes. So you need to ask, that's question number 2. And then last thing is, are you trying to scale it or are you trying to build a legacy? And what do I mean by that? Are you trying to scale it really big and then sell it? Right? Because that's a whole different set of systems and mindset versus, hey, Erik has young kids, Josh has young kids. Let's develop a system that's soundproof and let's set up a legacy. Mm-hmm. That it can be passed down generation, and let's set up something that they want to do. Totally different mindsets. There could be a little bit of a hybrid approach on that right there too, but you kind of make those 3 decisions before you go in there and either make an acquisition, invest into a company, etc.
I agree. Begin with the end in mind.
The end in mind. If you watch our podcast, we always say, work your numbers backwards. Work your goals backwards. I want to be here. What is it going to take to get to this point? And is what I'm going after right now going to get me to that point? And if it's not, you're wasting your time. Mm-hmm. Right? And it could be a multifaceted approach. You could say, I got a service company over here. I have real estate on the back end. And together combined, we can get there. Mm-hmm. Right? Mm-hmm. I can get to my goal. So the closing punch, I want to say, I looked this up and I thought it was pretty neat. And it says, if you want speed, buy. If you want control, build. If you want an empire, do both.
Interesting.
And I read this little closing punchline right here, and I thought that was pretty accurate.
I would agree, yeah.
Because what we have found out is you can grow a lot faster through acquisitions, but you better have a good base. Mm-hmm. You better have a good platform. You better have experience. And once you can do both, a hybrid approach, you can grow an empire quickly. You can get your EBITDA up, what Erik likes to talk about. You can get your brand larger and more impactful, and brand awareness, right? You can put more pressure on your competitors where they have to sell out to you, mm-hmm. right?
I'll throw one little caveat in there. So we were just talking about begin with the end in mind, right? Another piece and I think we've talked about it before, but if I haven't, this is a good little nugget for you to remember, and I don't think that we did this very well, in my opinion. We just got semi-fortunate with some time frames. But when you're beginning with the end in mind, a piece to consider is whatever you're getting in, if you're building and or buying, is what does that business trade at what EBITDA?
Well, I just learned a hard lesson.
Well, please explain. After I get done telling what I'm talking about, I'd like to hear what you're talking about. So what I'm saying is that all businesses get traded out, get sold on a multiple of EBITDA. If you don't know what EBITDA is, look it up. I'm not going to spend the time. We've talked about it a couple times. But and if you can get in, you may spend a lot of money getting into a business that may trade at only a 3 times EBITDA. You could get into a business that is the same amount of capital to start it or build it, and it could trade at 10 times EBITDA, which is significantly more. So understand the business in the end piece of it is very critical, because if you're in it to get a return on your investment at the highest rate possible, you need to understand this before you get into business or buy into a business.
I mean, I just found out the hard way.
Let's hear about it.
I've spent 5 years of my life helping invest in a company, and I realized that they don't, I didn't realize it, but I understood what they traded at, and I thought it would be a lot easier to get there at a faster pace. Right? Mm-hmm. And respect the people in this industry, but with the person that was operating it, you know what I mean? I don't think it would have ever got there. So what I realized is we spent 5 years of our life and a lot of assets and a lot of capital injected, right? And we were probably never going to get it to the point where the EBITDA multiplier had been worth my time. Mm-hmm. So we had to make a tough decision. Did we shut down the business? No, it's still worth money. So we sold those clients, and we narrowed it down to the things that were making our margins, and we're going to rebuild it with a very niche focus. So to Eric's point, what sucks about this whole conversation is if you don't pay attention or you're not willing to make tough decisions, you could spend a large portion of your life building something that doesn't really have a lot of value.
Mm-hmm. Experience is key, man. Like I say, you can't hardly replace it, right? Is having the experience. And if you're going to get into a business, I would find somebody in another state. We always talk about this, is find somebody in a different state. Business owners, they love to talk about themselves, right? They love to talk about their business.
We started a whole podcast about it.
So they love to talk about it, right? They're proud of it. And I understand, right? I'm living it. I understand what it means. I have no problem sharing, obviously. But find somebody that's in a different state, in whatever industry you're wanting to get into. Ask them a million questions before you jump into business, or before you go buying one, or before you go starting one, because you're probably going to regret it if you don't. And you might find something in there that could deter you from buying, or it may double down on the reasonings why you should.
I have a podcast that you and I did, and I was fully transparent of how I started my very first tool company. And you just have to be radically honest with these business owners about, hey, look, I've never competed in your area. I'm starting a tool company. What would you do if you had to start over again?
Yeah.
How would you start? What markets would you attack?
Yeah. And so don't be afraid to call and ask,
and write down notes. Don't just think you're going to have it in your head, because you need to call about. Don't call one of them, think they all have the answers. Call 10 of them, call 20 of them, call 30 of them, and see what common denominators that they're all giving you that are the same, and do those things, right? Mm. So we're going to end with this. Do you buy a business? Do you start a business? It's up to you. We would love to hear if you have done either of these and what business lines they were in.
Mm-hmm. Yeah, and if you're a business owner, we're always looking for people to come visit us on our podcast, share their story. So hit up I'm sure, Alex, we have a place on our podcast YouTube channel that they can get a hold of us, right? Yeah, in the description. So if you want to come join us on our show, we'd love to have you. We obviously want to learn a little bit about you first. Make sure we understand what you're about, what businesses you've done, what you started, what you bought, whatever. But we're not super picky, to be honest with you. As long as you're an entrepreneur or you're a very good subject matter expert in something that is related to business, we'd love to hear from you. So get a hold of us in our description. You can get a hold of us. Make sure you do that. Thanks for watching. We'll see you next week.